Hey everyone, I'm sure you've all seen those popular trading patterns, but when I started researching for this video, there was so much nonsense information that I almost went gray. You're trading a descending triangle and suddenly it breaks out in the opposite direction. Sound familiar? Recognize the situation? Or how about this? It looks like the market is about to reverse according to all the rules, but it decides to go in the opposite direction once again. This video will reveal the essence of all patterns without any fluff, insights that I've gathered over 3 years of public trading. A brief introduction. Throughout the history of charts, all sorts of market situations have occurred. Naturally, these situations began to repeat. The reason for these recurring scenarios is not in the news, politics, or financial reports. It's all about the psychology, and that's what technical analysis is built upon. The most vivid example of this is patterns. We'll analyze how to predict and use these patterns from a psychological perspective. But enough with the introductions. Let's get to the patterns. To begin with, we'll divide all patterns into 2 categories: continuation patterns and reversal patterns. In order not to make this video too long and not to analyze each pattern individually, I'll show you the main rules that govern how these patterns work. We'll use the most popular ones as examples. Let's start with continuation patterns. We all know and love the triangle and wedge patterns. There are 2 types of wedges. Ascending, formed during a local uptrend with 2 trend lines. Descending, similar but formed during a downtrend. There are 3 types of triangles. Ascending, formed by a resistance level and a trend line. Descending, formed by a support level and a trend line. Symmetrical, similar to a wedge formed by 2 trend lines. It differs from a wedge in that there is no clear local trend. If you look closely at all these patterns, they follow the same principle. The price range narrows as the pattern forms, leading to a breakout. A breakout occurs when volatility decreases at the end of the pattern and then shifts to high volatility, breaking a level or trend line. If you've watched my previous video on volatility, you'll be familiar with this phenomenon, known as the law of volatility change. Low volatility changes to high volatility and vice versa, and this law is what drives all continuation patterns. As with all technical analysis, market psychology comes into play. Traders believe in both trend lines and established levels. But when there's no room left for the price to move, it breaks out in one direction. At the same time, volatility changes and an impulse triggers active movement. This makes our trades more confident and allows us to close further from the entry point. The conclusion is that all of these patterns signal a change in volatility from low to high. Yes, volatility is constantly changing, even within these patterns. So, why wait for the pattern to fully form? Because these cycles are unpredictable and vary in duration. Patterns give you a specific entry point, thereby confirming your trade. The second category of patterns, reversal patterns, such as head and shoulders, tops, bottoms, which are simply inverted tops. These patterns form when the market tests a certain level. For example, after a strong initial move, the price stops at a certain support level and then bounces sharply off it. It then makes another unsuccessful attempt to break through this level. We don't care why the price stopped. The main thing is that the market tried to break it several times. After a series of failures, the local trend reverses. Reversal patterns work best in sideways markets, where there is no global trend and local trends change frequently. Since all reversal patterns are based on a support or resistance level, they confirm the breakout of that level. I want you to clearly understand the main point. I do not trade based on patterns, and I firmly believe that patterns do not work. Then why am I telling you all this? Because patterns don't work by themselves. I trade based on strategies that include patterns as part of the process. For example, the rule of not trading against the global trend is also part of my trading strategy. The global trend rarely changes, while all local trends are just pullbacks from the global trend. I use patterns to confirm entry into a trade. A triangle pattern indicates that volatility is changing. An active price movement is beginning. It also indicates a specific entry point. Tops or bottoms warn of a change in the local trend, so it's worth paying attention to this trading asset. To reinforce the material, let's analyze my trades using patterns. Descending triangle. At the end of the pattern, volatility shifted from low to high, breaking through the support level. However, I didn't enter the trade immediately because there was another support level below. The global trend is downward, which aligns with our strategy, and this section can be considered a pullback from the global trend. The triangle pattern suggests that this pullback is ending and the trend is continuing. After the retest, volatility cycled again from low to high, and at this point, I opened the trade. I chose the expiration time based on the potential of the move, the previous extreme, but the price could have stopped here or here. So considering the pullbacks, I opened the trade for 9 minutes. Inverted head and shoulders. Sideways market with no global trend. This means that local trends often change within a certain price range. These are the best conditions for trading reversal patterns. Let's mark all the support and resistance levels. These two form the main range of movement. Then there is this support level that the pattern tried to break but couldn't. It reversed and returned to this uptrend. This resistance level served as its pivot point. We'll open the trade on its breakout, but only after the breakout itself. The movement's potential is up to the maximum value of the range. But when choosing the expiration time, you need to consider this resistance level. After bouncing off it, there's support below that the price might catch onto. I can't wait to show you the new strategies I've been developing since the beginning of this year. There are only 2 more videos on the basics so that I don't get distracted in the strategy videos by explaining their components. Upcoming, you'll find candlestick patterns and indicators. So, subscribe and hit the bell to make sure you don't miss out on important information explained in simple, accessible language. Stay safe and be in touch.